I'm Charlotte Tweed, founder of Liberty Travel Coach, relocation strategist, and welcome to Free Thinkers Rising. And today I have with me Rich Checkan from Asset Strategies International. Rich, please introduce yourself to everyone.
Sure, Charlotte. Obviously, we go way back, but for those listening, you may not know who I am. I'm the president and chief operating officer for Asset Strategies International. We're a 44-year-old Rockville, Maryland-based precious metals dealer. So we buy and sell gold, silver, platinum, palladium, coins, bars, certificates, and we also deal with rare or numismatic coins. We buy and sell that. We work with personal funds, IRA funds, storage domestically and worldwide. So anything you want to do with precious metals, we can help. And we're pretty tuned into that environment. So
Yes, you are. And I think you have some good insight today to help our listeners reclaim control.
yeah, because it's
Yeah.
slipping away if you let it.
Yes, exactly. So let's start with the evolution of the market. Rich, what are your insights there?
Yeah, so we've got a bit of a bull market on our hands. I think you got to be living under a stone if you didn't see that over the past 3 years, gold moved up from about $1,700 an ounce to over 5,500, and then recently has pulled back to $4,700 where we are now. I kind of break that up into about three different phases. The first part I kind of look at as the head start on the gold price, if you will, before the bull market started. And that was all driven. We've talked about this in the past, Charlotte. This was all driven by central bank sales, right? Central banks have been buying gold since 2022 like it's going out of style. Prior to 2022, I think, go back about 50 years, I don't think central banks ever bought in a year more than about 650 tons of gold. Okay. 2022, they bought over 1,000 metric tons. 2023, they did it again. 2024, they didn't do it. Or no, I take it back. I got my years mixed up. 2023, they bought 1,000 metric tons. 24, they did it again. 25, they didn't quite get there, right? They bought 800 metric tons. But clearly, central banks were changing the way they were structuring their reserves. They were shedding US dollars in their currency reserves, and they were replacing that with gold, which is also now a tier one asset, probably the most liquid asset on earth. And everybody's watching that gold price. I can tell you, as a gold dealer talking with clients over those past 3 years, everybody's like, well, no, gold's really high. I'm going to wait for it to pull back. But the central banks kept buying and the price kept moving higher. So I heard at $1,700, 3 years ago that, gold was too high, near all-time highs at $1,900, and people were waiting. The next year, it was at $2,400, new all-time highs. The year after that, $3,000. And then, like I just said, at the end of this year or the previous year, we got over $5,500 an ounce. But investors weren't in this market at all. So that's really the first phase, is just central banks buying on a concerted effort. And by the way, they have not stopped. And the gold price responding by going higher year after year and making new all-time highs. But I don't think the bull market really started until the second half of last year, because that's when individual investors got into this market. So that's the second phase. And we know they did because we saw the silver price start to move. Say, okay, Rich, what the heck does silver have anything to do with gold? The reality is central banks don't buy silver, right? It's too bulky. They don't want to mess with it. Gold is a lot more easy and dense wealth to deal with. So they concentrate on gold. So when the central banks were buying gold, the gold silver ratio, right? So the number of ounces of silver it takes to buy an ounce of gold went way high. It was up at one point to 127 to 1, which is unheard of. Previously, 80 is the point where gold and silver are both at their lows. The ratio is as high as typically it has ever been, usually about 80, and it got to 127. That tells me that central banks were buying gold and nobody was buying silver. But when investors got in this marketplace, and they did the second half of last year, I mean, last year gold was up a good bit. I want to say probably about 60% for the year. Silver was up 160. Okay. And that's what happens when silver finally starts moving, investors start buying, it outpaces gold. It moves with a vengeance. It's a very volatile, smaller capitalized market. And we saw that the second half. So now I know investors are in this marketplace and they were buying gold and silver and drove those prices to the beginning of this year, $5,500 an ounce in gold and about $115 an ounce in silver. Now, silver started the year at $29, just to kind of put that in perspective. So that's the second phase. And now, kind of the third phase we're in right now is ever since bombs started falling in Iran. Okay, so you would think that anytime there's conflict, war, tensions, etc., that gold would respond by going higher. But that is not always the case. And it's certainly not the case in this case. Since those bombs started forming in Iran, we saw a pullback in gold from $5,500 an ounce down to below $4,600. And it's trading just above that now. For silver, we saw it hit that $115 an ounce mark and it pulled all the way back down to below $75 an ounce. So for gold, that was what, about a 15% retracement. For silver, it was like I don't know, 35% retracement. So significant pullback. Um, and everybody blames that on the war, and the dollar's responding by getting stronger. That's what everybody says. Of course, it's still below 100 on the index, trading at 98 and change, but I guess that's strong. It's stronger than the other currencies that we measure it against, but not against gold, in my opinion. So since the war, the dollar has been benefiting. Gold and silver have pulled back. I personally don't think that has anything to do with the US, Israeli, and Iran conflict. All right. I think that was just the markets were a bit overheated. They needed to correct, and they did. And whatever the excuse was that people want to label it, whether it was the nomination of Warsh as Powell's successor or bombs falling in Iran, whatever you want to call it as the catalyst, it really doesn't matter. The markets needed to pull back. And right now, I think that generates an incredible opportunity for folks.
Well, where do you see gold going?
Well, see it going higher, clearly. And I say that not tongue in cheek, not because I'm a gold dealer. I say it because I don't see the behaviors in dealing with central banks and fiat currencies and how they mismanage those currencies. I don't see anything changing right now. So the reason we're in this mess, we have fiscal issues, and it's not just in the US, it is worldwide. The rest of the world has followed the US's lead, and they're overspending and they're generating mountains of debt. Okay. And it doesn't matter if you go to Asia, Europe, here in North America, the same thing is happening everywhere. Politicians are spending more than they take in, being very bad stewards of the national currency. And the problem with that is it generates that debt. The big hole, if you will, that you have to dig out from under. In the US, as the world's currency reserve, we have to fund that debt by basically printing more money or creating more money electronically out of thin air. You have to pay your bills. Otherwise, people can't trust the currency that the world is bound to spend for goods and services, right? So what happens is we spend too much, we generate that debt. In order to cover it, we're not going to stop spending. At least that's not what politicians are doing so far. So what they're going to do is they're going to expand the money supply, right? So that by definition is inflation. Everybody says inflation is when the prices of the stuff we buy goes up. That's the effect of inflation. Inflation is the expansion of the currency. So when you create more currency units and they're chasing after the same finite number of goods and services, it's eventually going to cost more and more and more to buy those same items because you have more currency chasing it. It's just simple supply demand economics. And that is what we see as the increased price levels. We see it in gold. We'll see it in a cup of coffee, a college education, a new home, a new car. Everything that you want is going to cost more when politicians overspend and expand the money supply to cover the gap. And we see that continuing. And then you throw one other wrench in the works. That's enough to make the central banks around the world say, hey, I don't like what's going on in the US. I want to back away from the dollar a bit. There's one other thing that happened, and with Russia and Iran and other places, we basically started weaponizing the dollar. And you and I have talked about this before, where um, basically if people weren't behaving, countries weren't behaving, we just cut them off from the monetary system. So they have to use dollars to buy and sell things around the world. And then we say, you don't have any access to dollars. You just cut off. Um, and those sanctions basically had an impact both on our enemies, but also on our friends. Because our friends said, listen, what if someday I do something and upset the US and they cut me off too? What's my plan B? Right?
Mhm.
The plan B that everybody's gravitating toward has been gold. So that continues. The spending continues. I mean, in the US, we're topping $39 trillion in debt. It costs more to service the debt. It's the number one line item on the budget. It costs more than we're spending on our military or anything else. And, it's not going lower with current and potentially higher interest rates in the future and a climbing debt. That debt service is going to cost more and more. In order to bridge the gap, we're going to have to print more money, which is going to be greater and greater inflationary pressures. So I don't see any of this going away. And that's why I believe that as long as long as you're looking forward and as long as congressmen and senators are not balancing budgets and being fiscal stewards, gold will go higher. There's no other way for this to play out, in my opinion. And when you find yourself in a pullback where the prices are a bit lower than they probably ought to be, knowing where we're headed in the future, I think it's a great opportunity to take advantage.
I agree. So how can gold be used for insurance?
Well, I think gold is by definition wealth insurance. Okay, so you've heard this definition before. Your listeners may not have, but I look at gold as a store of purchasing power. Right, so it locks in purchasing power at a level. It's a store of purchasing power with high liquidity for a potential financial crisis you hope to never have. And you know, gold has done that job for 5 millennia. Okay. You buy it, you hold it, it continues to hold that value. Greatest example I can give you is, the new suit, the business suit. Back in Roman times, an ounce of gold bought you a new toga. It was the business suit of the day. In 1913, when the Fed was created, a new suit would cost you about $18. Okay, US. An ounce of gold was $18. Okay. Today, gold's at $4,600. Will that get you a nice new suit?
Can
Absolutely.
can $18 buy you a pair of
Well,
socks?
$18 won't even get you a sleeve. All right. So, and that's the problem. The dollar is not holding that purchasing power, but gold has and will. So even when it fluctuates in dollar terms, right, it's still able to buy the same amount of goods and services that it always has. When gold was at $1,900 an ounce, the previous bull market high, it bought a nice new suit. When it corrected down to 1,050, guess what? You could still buy a nice new suit for 1,050. It represents true value versus the dollar, which is a horrible measuring stick for wealth or value. Anytime you use a measuring device, it's got to be constant. It's got to be trusted. You got to be able to depend on it. And, I use the example, you've heard this before, of the desk. I have a 6 foot long desk. And if I took a 12-inch ruler and I measured it, it's going to take 6 times. It's going to be a 6 foot desk. If overnight I went ahead and I cut an inch off the end of that ruler and I measured my desk again, now it's a 6.5 foot desk. Did my desk grow? No. Did the gold grow? That was an ounce at $1,700, but now it's an ounce at $4,600. Did an ounce grow? Did you get more gold? No. The dollar, the measuring stick, is a horrible unit of measure. It's a horrible measure of wealth or value. Gold is a much better tool. It's also a much better preserver of wealth. So that's why gold is your insurance. And the way you deal with it is very simple. You buy it, you hold it. I like 10%. of my net worth in gold. I buy it, I hold it. If I never have an emergency, I'm never going to sell it. I'll give it to my heirs, my kids, give them a start in life. If I have a need, though, I will sell it immediately before I could blink an eye, and I'll take care of the fiscal situation, and then as quickly as I can thereafter, I'll start to buy more to replenish my wealth insurance.
Now, you talked a little bit about silver in the beginning. So
Yeah.
how can people use silver for profit versus gold being the store of wealth?
Yeah, and you can use gold for profit too, but I really like silver for profit. The relationship between the two, they're both, you know, monetary metals. They have been over the years. Both have been used for coinage and whatnot, and economies are based upon them. But silver is a much smaller market. So gold is your leader. It'll take the lead. It'll start moving down in a bear market, and once that trend's established, silver will follow slowly, lag behind it, and then eventually outpace it. It'll go deeper to the downside. And then when that turns the corner and gold starts moving back up again, gold is your leader. It will start moving up. It'll establish the trend. Silver will start to follow, lag behind like it did for the first 3, 4 years when the central banks were giving us a head start. And then it'll jet forward and surpass gold in terms of, the appreciation. So because it dips deeper and it goes higher, I love that larger pendulum swing, that greater profit potential for silver. And it's pretty attainable. I mean, it takes 60 ounces of silver right now to buy an ounce of gold. So it's much more affordable for most folks. It is a bit more volatile, right? So it's going to have those deeper deeps or deeper pullbacks. It's going to have those taller rises, if you will. But it gives you those opportunities. And a lot of people will look at that gold silver ratio, how many ounces of silver it takes to buy an ounce of gold. At the peak, the high number, 80 or higher, that's a time to buy both. Your wealth insurance is cheap, your silver for profit is cheap. Um, as it starts moving up, silver outpaces gold and the ratio comes down, right? So now we get down, you want to get down to about 35 or 50 to 1. And now you're saying, okay, maybe it's time to exit the for-profit play on silver. Maybe we're starting to reach our point. Now we can get as low as about 18 or 20 before it stops, but because it's a volatile market, because you don't know when it's going to turn around, if it's going to abandon ship, you might want to start looking a little sooner at silver. But we see a lot of people will go ahead and sell at those points. And another thing a lot of folks will do is when, they'll trade it. So, you can get, at the peak 80 ounces of silver for an ounce of gold. So a lot of folks will at the peak will sell their gold and buy silver. And then as the ratio comes down, because silver is moving up faster than gold, now it takes 35 ounces of silver to buy an ounce of gold. So then they'll go ahead and sell their silver and purchase gold and kind of ride that train back up. So there's a lot of different ways to play it, depending on your level of sophistication, your comfort level, et cetera. We can kind of walk you through that. But I love silver for profit. I love gold for insurance.
So what are some of the best ways or the best option that you're aware of for traveling nomads, digital nomads to purchase gold or silver?
Well, in previous lifetimes, we worked with you and others who touch a lot of digital nomads, and what we found is one of the products we helped design for the Perth Mint, Western Australia, is probably the best option out there. It's hard to travel across borders with precious metals. Not every country allows precious metals. If they do, some of them will charge taxes, import duties when you come in or exit the country. Some of them will flat out confiscate it and figure out what they want to do with it later. Okay. So it's not really safe if you're going to travel a lot to take that with you. Plus, it puts you at risk. That's untraceable. Once if somebody takes it from you, it's gone. It's not like you can say that was my gold coin or that was my gold bar in most cases. So not easy to travel with if that is your lifestyle of traveling and moving about, whether it's to escape the rat race or, to see the world or what have you. So, what the Perth Mint has put together is an online program called the PMDDO, Perth Mint Depository, uh, Distributor Depository Online. Okay. I should have written that down before I got in here. We only been working for a decade now.
We always speak these acronyms and then forget what they mean ourselves.
Yeah,
We're
and
not.
this is not the best acronym, but it's a fantastic program
Yeah,
because
yeah,
you're able, if anybody's bought gold or silver out there, you know the premiums involved to buy and sell and the spreads between the two. And there's a cost when you buy and sell something. With the PMDO, it's virtually nothing. You're looking at a 1% um, uh, commission, if you will, that's split between us and the Perth Mint when you buy, and 1% when you sell. 2% round turn. That's it. It's unheard of. The minimums, unbelievable. 50 US dollars. That's your minimum to get in and out of gold and silver or platinum at the Perth Mint. You can trade this online 24/7. You don't need a broker to say, hey, I want to sell my gold now. You just jump online with your secured password and you sell it. And it's somebody else is holding it. In this case, it's the world's only government guaranteed precious metal storage program. So it's at the Perth Mint in Western Australia, stored at the Mint, 100% backed metal, never leased to a third party, never used as backing for derivatives, always insured at 100% of full market value at all times at their expense. It's a very easy program to deal with as long as you can just get access to the internet to access your account securely. You can buy and sell, trade, do what you have to, add more funds to it, withdraw funds from it. It's all pretty easy to do.
yes, and I can vouch for that because I have been a part of the program. I've used it, so I know what it's like to buy. I know what it's like to sell, to do that. And if you do have to sell or need to sell or want to sell, it's almost instantaneous. It doesn't.
Yeah,
It's
and I didn't want to out you without getting your permission first, but yeah, you've
yeah.
seen it firsthand. What a fantastic program! I think it's the safest, most cost-effective option available to anybody, especially for those that travel a lot.
Yeah, and perfect for me because we do move around and I love gold, I love silver. I can't, like you said, take it with me. It's a challenge. I don't want to carry it across borders. So this
Yeah,
is a wonderful option and the $50 a month. It's a great savings plan too. Yeah.
yeah. So you can set it up automatically, so it just buys every month, without even paying attention. So.
Hmm.
Yeah.
So what is one action, Rich, that you think anyone could take today to reclaim control?
Yeah,
One.
I think the bottom line is a lot of our buying power is being taken away from us with taxation or inflation. They're both different types of taxes. If taxation is clear, it's on your income or it's on sales tax or what have you. Inflation is kind of insidious. It's a tax that we pay for government mismanagement, and we're paying it all around the world. Um, we work really hard to earn our dollars, our euro, our yen, or what have you. And to have it taken away from us is really, it bothers me. The best way I know to protect it is to take some of that earnings and put it into something that is not eroding. In terms of purchasing power and value, and like I said, it's just take advantage right now of the dip in the marketplace. Whether you're buying for insurance, if you have your gold for insurance taken care of, fine. If you haven't, here's a great entry point. I don't think the prices are going lower in the future. I think they're going higher. So it's cheap. If you have that covered and you want to go ahead and make a little bit of money off precious metals, I think silver gives you an incredible opportunity. It's down 35% from the highs. It's fantastic. And everything that was there ahead of time for the fundamentals for silver to take it to 100 to $120 an ounce was still there, but it actually just got put on steroids because um, we've got 5 years of supply deficit. The first two wiped out 11 years of surplus. Okay. So for 3 years, we've been digging a deeper hole in terms of supply for silver. On top of that, the data centers for AI, solar panels, batteries, you name it. All these things are consuming more and more silver. Plus, as I mentioned, investors are getting into the marketplace now too, as less and less is being produced. So that was all enough to get us to $100 or so an ounce. Guess what? January 1st, China, the world's 70% supplier of refined silver to the world, 70%, raised their export quotas, made it more difficult for their firms to send silver out of the country. So a lot less silver is going to get on the market. I think double those predictions. The predictions for $90 to $100 silver were coming out of a 45-year cup and handle formation in silver that said, we're going here. Technically, there's no stopping us. I think we just doubled those numbers. Now we're looking at $180 to $200 silver before all said and done because of these Chinese export restrictions. So I think it's a great time for profit to buy some silver here, and PMDDO is probably the cheapest, safest way on earth to do it.
Wow. Excellent, Rich. Thank you.
Yeah,
So how can people find you or get a hold of you if they have more questions?
yeah. So I'll give you two numbers, right? So if you're in the US, Caribbean, and Canada, I believe you can reach us toll free at 800-831-0007. 10 better than James Bond. All right. If you're outside of those locations, our direct number is 301-881-8600. Of course, you can always get us virtually. We have a presence on the internet at assetstrategies.com. Or if you want to email us, just send us an email to info@assetstrategies.com.
Wonderful. Thank you, Rich. I appreciate your time today. This has been fantastic, and it was wonderful to catch up.
Yeah, thanks for having me, Charlotte. It's always a pleasure.